So how do you judge that, and can you learn those things, right? I mean, are you just born innately with that? And maybe this is a good sort of segue as you answer that into walking through how you became someone who I would define as a very successful founder, two different companies that had great exits. Were you born that way? Was it circumstances that pushed you to be that high IQ, high EQ? How did you head down that path? And then can others emulate that?
Yeah, I've never judged things by outcomes or by what other people think. It's kind of how do I feel I've done relative to what I could have done. And so it's always been, I don't know, it's always been my own yardstick. And against that, I made a bunch of basic mistakes as a first-time CEO. I didn't know what a good exec looked like, so I'd hire the wrong person, then I'd be too slow to fire them. I didn't build the product thinking about how we'd sell it. I had this more sequential attitude of let's just build something great and then we'll figure out how to sell it next.
Do you think there is a difference at all? Has that mindset changed, or do you think even the best companies today are able to recruit people like that? And so what I mean is a little bit, I think there is a somewhat difference in generations where you have people who are like, hey, like I really want work-life balance, or I'm not really willing to put in that time and effort or be a little bit patient just to see where things go because I'm surrounded by this growing, fast-growing company by amazing leaders like Aaref, who I can learn from and grow from, even if I get some hot offer from somewhere else, I'm in a good spot. Has that changed at all? Or is it just the good companies can find people who are going to stick around and really put in that effort, irrespective of generational change? Welcome to the next episode of the Entrepreneurial Excellence podcast. I'm very excited to have Aaref Hilaly with us today. Aaref is a special person in my life because he was the first person in his company, Clearwell Systems, to offer me a job to come work in Silicon Valley, which was a place of my dreams. I was one of those nerds and geeks, Aaref, I don't know if I ever told you this, who if I walked in the streets in LA, I would have no idea who the famous actors were. But like when I came to Silicon Valley, actually, when I got off the plane that Clearwell paid for to fly me out here, got off the plane and driving down the 101, I was like, oh my God, like Google's over here and Apple's this way. And I was like mind blown. And so to come here and be a part of that and to have, you and the whole team at Clearwell give me a shot and now be a place that I've lived for 14 years and had a lot of success, and we should define that, of course, was really special. So it's really a pleasure to have you here today as someone who I've learned from, emulated, and hope to continue to emulate throughout my career, because you've had so much success throughout all the things you've done, building two different companies, going to work at some of the best VC firms in the world, and really picking and investing in some of those best entrepreneurs. So Aaref, thank you so much for joining me today.
No, it's really a great pleasure to be here, Adam. And honestly, I think I definitely learned as much from you as you may have done from me. And it was such a treat having you on our team at Clearwell. So I'm thrilled that I get to kind of share my morning coffee with you and have a great chat.
Yes. And so one of the things I love to do just to kick things off is actually, right, the whole thesis of entrepreneurial excellence is, what does it mean to be excellent? What does that look like? How do other founders, budding founders, or ones who built many companies, and myself included, how do I become that excellent entrepreneur? But the question then becomes, if you want to explain that, you need to define it. So how do you define excellence? What does that look like in your mind?
Yeah, it's really hard because excellence for one person is not what it is for another. There are other jobs where there are objective criteria. If you're the fastest runner, if you're publishing the most papers, if you're selling the most bonds, if you're, I mean, there are more objective metrics. I think for entrepreneurship, the challenge is there are just so many different ways of being excellent, and that the way you become excellent is different for each person. So that's why I think it's hard. If I
But
had to, go ahead.
is there an objective standard to some extent, in the sense that the objective might be, at least from a venture capitalist perspective, the objective measure is, did you have a big exit? So is that excellence
Yeah,
in
I
the
mean, that's
end?
not, no, it's a noisy signal. I would say exits are a noisy signal because I've seen phenomenal founders flounder. I've seen other founders that are absolutely not excellent do extremely well. It's just how life works out sometimes. So I think of it, I get in terms of entrepreneurial excellence, I think of it as having that unique combination of personal qualities that enables you to seize an opportunity that has opened up for you and build something that could be substantial. Now, I think that's, and so what, breaking that down further, what does that mean? I think it's this combination of having of IQ and EQ. It's sort of unique insight and depth, sufficient depth in an area to see things that others don't see, combined with the ability to inspire and lead a group of people towards it. And that's, to me, that's what entrepreneurship's about.
So how do you judge that, and can you learn those things, right? I mean, are you just born innately with that? And maybe this is a good sort of segue as you answer that into walking through how you became someone who I would define as a very successful founder, two different companies that have great exits. What, were you born that way? Was it circumstances that pushed you to be that high IQ, high EQ? How did you head down that path? And then can others emulate that?
Yeah, I don't think you have to be born that way, and that view is informed. I don't feel I was born that way. It was something that I was just determined to do. So I feel that anyone with the who's sufficiently determined or wants to do this can do it. There's no magic to it. In my own case, I grew up in England. I moved to Silicon Valley after grad school because I wanted to be an entrepreneur. And shortly after arriving, started a software company, a data center automation company, with a couple of wonderful co-founders, Basil Hashem and Mike Schrepfer. And that first company was a real adventure. I mean, I had no idea what I was doing. I think we were all just young and trying to figure it out every day. Made a lot of mistakes, and I think we're quite fortunate that we had, to our credit, picked a good market. We shipped a product. We got some early revenue. In those days, all the numbers were smaller. So we raised, I don't know, I can't remember, about $10-ish million, and we sold it for about $70 million after a couple of years. And to the outside world, in the context of those times, it looked a success because these were tough times for the tech industry. Personally, I felt like it was a failure. I felt like I totally botched it, and that I had not been a good first-time founder CEO. I had not been thinking on the right level, and I was determined to do it again.
Why do you think it was a failure? Why did you put that pressure on yourself? Because once again, like that sounds like a 7x exit for your approximately, at least money on money for your investors. Seems pretty good. I mean, depends on the IRR and time frame, but still.
Yeah, I don't. Again, I've never judged things by outcomes or by what other people think. It's kind of, how do I feel I've done relative to what I could have done, and so it's always been, I don't know, it's always been my own yardstick. And against that, I made a bunch of basic mistakes as a first-time CEO. I didn't know what a good exec looked like, so I'd hire the wrong person, then I'd be too slow to fire them. I didn't build the product thinking about how we'd sell it. I had this more sequential attitude of, let's just build something great and then we'll figure out how to sell it next, which is completely wrong. You have to design it with distribution and sales in mind. There are just so many fundamental things like that in hindsight or in retrospect that then become hard to fix.
Do you see with a lot of founders today? I mean, you learned these lessons 20 plus years ago. It sounds like a lot of things you're saying, there are things that I've at least seen. I've had the privilege of investing in a lot of companies too. A lot of founders make those same mistakes. I mean, so are there ways people can learn to avoid those because there's so much more knowledge out there today?
Oh yeah, completely. I think it's much easier to self-educate today than ever before. And the one thing that I think the best founders have is this tremendous ability to learn. You can call it slope, you can call it learning. Is that they will meet people and they will suck knowledge out of them, think about how it applies to their situation, and move on to the next person. And that is just a phenomenal thing to see. So I think founders today have more opportunity to do that. There's a much richer seed ecosystem. There are many people around who are able to advise early stage companies. And then the venture industry has also got better, frankly. It's got much more supportive of early stage companies and provides a lot more events and other ways of helping that early stage of the journey.
Yep. So okay, so you learn those lessons, and then you decide to go. Did you go over to the acquired? It was Cisco, you said, right? If I'm remembering right from the.
We were acquired by Sun Microsystems.
Sun.
I didn't go. I was spared having to go there. So I started working immediately on my next company, which through a kind of long circuitous route to ended up being Clearwell, which is the company we worked at together.
Mhm.
And that was tremendous. We were in business for 6 years before being acquired by Symantec. We grew from 0 to 100 million in ARR run rate, about 300 people, growing 80% a year, and we were profitable. And it is literally, and partly from working with you, partly from all the other people that you and I both know, the most fun experience of my career.
Yeah. And what were the things you went into Clearwell thinking, I'm going to do differently this time? And how much of it was sort of luck choosing the right market? So Clearwell, for those who don't know, was an e-discovery company basically doing cleaning up legal documentation and data to enable lawyers to more easily find relevant information for cases and lawsuits. Why even that industry? It wasn't certainly, you don't have a legal background. Why that
Correct. Yeah.
industry? Was it lucky? Did you choose that industry specifically, or is it sort of just luck of the draw and it turned out to be a good wave that you were riding of sort of almost early machine learning? Let's use computers to search through tons and tons of data.
It's a journey that I think many entrepreneurs go through. We raised a seed round with a very general thesis. At that time, it was lots of information is captured in email. There must be a way of unlocking that to create business value. And again, this is a long time ago. So it was before the iPhone. More things happened on email. Fewer people were using text and messaging applications. So if you think of everything that happens in text and messaging and think that's happening in email, that makes all the information a lot more interesting. And so we had this theory around we can unlock information in there to help people make better decisions. And so that's what we raised our seed round on. And then we went out and spoke to a whole bunch of people. We built this interesting search and analysis technology. And it was really just by happenstance that we stumbled into e-discovery. There's a utility company in Baltimore, Constellation Energy, God bless them, who were our first customer and paid us $420,000 for our product. And this is before we had a website, before we had a real name. And so that obviously got our attention. And as we dug into it, we found that e-discovery, which is something none of us had experience in, was a great application for the technology that we'd built. And so at that point, we said, guess what? We're going to be we're not going to try and invent a new category, which is what we'd been trying to do before. We're going to become an e-discovery software company and execute on that. And that's when sales really took off.
How did you even get in the door with Constellation? Was it just a lot of hustle and grit to say, I'm going to go find these big companies who we think have a lot of email data and they'll figure out something they need to do with it?
Yeah, we were just calling everyone we could. So it was just hustle. And I remember Andy Byrne, who's now the founder CEO at Clary, who was one of the founding team at Clearwell as well. He and I would take these red eyes and we'd fly into Washington because it's cheaper. We'd drive to Constellation, do our meetings, drive straight back to the airport and fly back again. And so, that's just what you have to do. It's I would always say to myself, I wish we'd found a customer closer than 3,000 miles away. But then the other part of me would say, what an amazing country that I can fly 3,000 miles to find my amazing customer. And it's like I'm next door, pretty much same country, everything's. So I think it's just hustle. But to answer your first question of what's different second time around, as a CEO, I just was thinking at a different level. So my first company, I was very tactical. I was in the weeds. I was trying to do stuff myself because I didn't want to be overhead. We need a data sheet, I'll do that. We need a financial model, I can crank that out faster. Why should I pay someone to do it? My second company, totally different. I'm kind of, okay, everyone else can do things. I'm going to think about where we need to be in 6 to 12 months and then insert myself in the handful of areas that really move the needle for the company. And that mindset shift for me was tremendously helpful.
So this is actually a huge theme of my own and actually a bunch of the questions I want to ask you about, but is trying to do that myself, right? So I'm now a 4-time founder. And it's still really hard, I find, to get myself out of the weeds. It's one of my major goals. I have 2 EAs now. Like I'm trying desperately to get out of the weeds. And yet I still find myself, last night at 10 p.m., I was going into ClickUp, which we use to track a lot of our work and is our applicant tracking system, and making adjustments to some automations because people on the team didn't quite know how to do it. I'm like, I can do that in 2 minutes instead of helping them out. And how do founders, first, I think this is what everyone should do. But how did you really push yourself at Clearwell to say, you know what, I'm going to do things that are CEO, chief executive officer work and not founder level work? Like to me, there's a big mind shift between being the founder and being a CEO.
Yeah, I think so one key thing is not to hire EAs and chief of staffs, and instead hire principals who can lead and actually do stuff themselves.
Yeah.
And those people are a little bit more expensive, but but they're worth it essentially, because that's the only way ultimately you get leverage. I think if it's all about making you be able to do more, and it's all about you, there's a limit. I mean, no matter how great you are, there's only so much. Whereas if you can get someone else to actually do stuff themselves and lead and feel ownership and accept they'll do it in their own way, but they still get it done, then that's where you get real leverage. It's a hard one. You can't switch from founder to CEO too early in a company's life. So early on, I was in every single important meeting for the company. I remember the first time there was a meeting I cared about where I didn't go felt like a real milestone, because it'd be weird to have the CEO there, and so someone else would do it. So I think initially you have to be in that founder mode, but at some point you switch, and at that point it becomes more about working through other people. It's more about making the people around you successful, supporting them, working in the background, and letting go a little bit, accepting that they're not going to do it exactly your way. So if the documents you mentioned, I don't know how important they are. If they're super important, then you should be on them, and then you should be kind of helping those people do them right. If they're not so important, you have to just let it go and focus on what is important.
Yes. And I don't even try to do that. I've a long way to go, and it's a goal of mine to get there. What do you think? So, but backing up in once again, using Clearwell as a great example, what are the predicates, right? So, okay, so it sounds great. Okay, great. Hand things off to people who can do this work really well, and you can
Yep.
trust to go do it. But of course, the predicate is you have to hire those people and
Sure.
find people who can go do that. So, what were your heuristics as a second time founder that you looked for to bring those people on? How did you know when the right time was to bring those people on? Because of course, these people are expensive. Do you need a full-time
Yeah.
person in, a sales position or an engineering position or finance or ops, whatever? When did you make those decisions, and how did you find those people?
Well, I think the first objective when you start a company, you want to build a nucleus. So you got to build a core of really great people who can kind of be the glue for that you can then build around. And that doesn't mean just senior people, by the way. Those could be those are your early engineers. They're your office manager. If you remember, we had a tremendous person leading office operations at Clearwell,
Mhm.
Donna, and so I think that so that's the first goal. Where do these people come from? Initially, the first few recruits generally have to come from the network, because no one's going to make that leap otherwise. And so pretty much, many of the people on our team there were people who either I knew or other people we knew, either one of our board members knew, or so. And so I think that's step one. Then step two is trying to recruit for the kind of people you feel will be there long term, as opposed to the people who've got experience and maybe a bit more mercenary in their outlook.
Mhm.
And so you're looking for these missionaries, I guess is the way to put it, not mercenaries, even if they take a little bit longer to ramp.
Yep.
And if you feel you've got someone who's not going to make it, then you have to fire them pretty quickly. So to take the example of our office manager, she wasn't the first person that we recruited. The person we had before her was pretty terrible, and we got rid of that person pretty quickly. And then we found her, and she stayed for years. And so I think that it's the number. I mean, when you asked about what is to be successful, number one thing I think after spotting a business opportunity is having judgment around people in terms of what it takes to succeed. And they'll come from people initially, and then as you move outside that, you just have to look for those missionary qualities and be ready to remove people who don't have them.
The office manager is a good example, though, of obviously you still made mistakes, right? And I'm sure many more than just the office manager ones, right? So the first office manager maybe came through your network but wasn't a fit. What were the things you think you made a mistake on in those hires that didn't work out? And then finding the ones like Donna who were amazing at all the things they did. They loved the mission of what was trying to be accomplished. What was the difference between those in those types of people?
Yeah, I mean, everyone has their positions to find hard. For me, my kind of VP of engineering was my dark arts teacher at Hogwarts, meaning different every year for a while, because it was just really it was hard. It comes down to just cultural fit. It's that the best companies have a distinct way of doing things.
Mhm.
And those things just reflect the personality of the founder. I wanted in my company, I wanted to build a company independent of me that did not reflect my personality. And then I kind of found by the end it was just not possible to do that
Mm.
because the best companies have this kind of extreme logical consistency. And that only comes from kind of centering around a specific set of opinions. And the person who provides those opinions are the founder. And you see that in the great companies today. You see that in Elon Musk or Mark Zuckerberg or these people who've built great organizations. They have strong views on how certain things should happen. And it matters less what those views are. It matters more that everyone is aligned around them and everything is consistent around them. And so finding people who align with you like that, who can absorb how you want to do things and will operate that way, that's what creates this kind of force multiplier that enables the small company to produce so much more than the big company.
Did you kind of write down those cultural norms for Clearwell and sort of said these are the things I'm going to look for in all the interviewers should look for as well? And I'll even use myself as a personal example. I remember and really appreciated that at least when I came on board, you were still interviewing every candidate.
Yeah.
And I remember it was quick. It was like I think a 15-minute meeting with you, but I still sat down with you. I don't remember at all what the questions are that you asked me, but you probably had a pretty set list of questions you'd ask every candidate who made it far enough along in the process that they made it to your office for a chat. Were they related to cultural fit? Was that sort of the questions you're looking for?
Yeah. I mean, so I interviewed every and had approved every single person of the first 143 people. And then once we got to 143, I looked at my calendar for the coming quarter, which I do on a 90-day basis, and said, okay, I've got to recruit 2 execs. At this point, I can't, I just can't interview everyone. But by that point, I also felt that I didn't need to because I get feedback like, yeah, this candidate's solid, but I don't think they'd get past Ar's final interview because there'd been people who'd come all the way through that I'd then vetoed.
Yeah.
And initially, when I'd vetoed these people, the hiring managers had been very unhappy with me because they'd spent time getting these people and wanted them in the chair or feeling pressure to get stuff done. But my point to them was that they're sending me candidates who are good for today, but not for a year from now or 2 years from now. And that's not the candidate I want. I want the person who's going to grow with the job and be truly outstanding. And it's okay if they take a bit longer to ramp up. And so it's a different profile of person. In terms of the questions I'd ask, I'd really just try and understand the person and their motivations and just how thoughtful they are. And so there was no set list. And often the questions are unrelated to the job. And so as an example, there's a salesperson we were looking at hiring for the Boston area. And I noticed on his resume that, he'd studied comparative religions. And so my question was, did your study of religion make you more or less religious? And how did it impact your own beliefs? And so that was a discussion that we had. And so my assumption is by the time they reach me, they've been vetted in terms of their skills. I'm looking more at character and personality and fit.
In how much do you then hire for that sort of high slope, very high ceiling growth perspective and can really grow versus once again, I mean, you do need to get people who can get the job done. I mean, it sounds like your focus was like, I want to hire people for the long, who can really grow with us, but you also need people who can just get down and do the job today because there is a level of pressure that you have as a founder. Man, I just need to get things going and make sure I can hit next quarter's milestones, let alone, I don't know where I'm going to be in 18 months.
Yeah, it's a balance. So you look to balance that across the team. So it's fine. It's fine to have 1 or 2 people who are just good right now with maybe a lower ceiling. But if it's self-contained areas, specific skills. But if you're looking for someone who's going to be recruiting people within the company, who's going to be, let's say a mid-level management role and having influence over others, then I don't know. I just don't think you can compromise on that.
Yeah, no, that's a great point. How did you end up finding people and recruiting folks as well? Did you have recruiters? Was it, once you start getting
We
pathways?
had recruiters, but we had so our underlying technology was a search technology, and we were located in Mountain View. So, for people with knowledge of search, if you're recruiting in Mountain View at the time that we were building our startup, we were probably not the first company that you were thinking of compared to our big neighbor Google. And so What we found was that we just had to recruit a different profile. That if it's as a startup company, if it's the super pedigreed, credentialed person from Stanford, that is probably not the kind of candidate that we're going to attract. And so we looked for people from top schools that at that time were not kind of Stanford profile. And they could be in the US. I mean, whether it's places, programs like, whatever, Berkeley or Michigan or wherever, it was CMU at that time. Or it could be from universities outside, the IITs and
Mhm.
Tech Gurion and various other technical schools, Waterloo. And so that's how we approached it. But we felt like we had to try and get the best from a different candidate pool.
Do you think those people in some ways have a different level of grit than, for people? I feel sometimes you have people, and I know you went to Harvard for business school, but like you go to Harvard or Stanford in some cases, you sort of feel like you made it, and like everything else after you got through school is like going to be gravy, and you're always going to be the top of the top. And I've sometimes found that some of those people are not as hardworking or not as creative and get frustrated. And what do you find the differences to be, or qualities that people have? Maybe it's just qualities that people have in general that maybe make you successful at school versus making you a successful employee or even founder.
Yeah, I think that exists generally, and I don't want to diss people from wherever, Stanford or what have you. There are great people at those schools. They just were not as accessible to us as a startup, was my point. And so I would rather get the absolute best people from some of these other schools than the not so good people from the high profile schools. In terms of the personal qualities you're talking about, yeah, I mean, 100%. Really, you want people with a chip on the shoulder. You want people with something to prove. The way I thought of it is, I'm not looking for someone who wants work-life balance and just wants a job. I want to offer someone a kind of career inflecting opportunity where they come and they put their heart and soul into it. And in return, we give them a platform for tremendous personal growth where at the end of it, they walk away being able to do things in a shorter period of time than they thought was possible. And so that was sort of the deal I wanted to make with people who joined the company.
Do you think there is a difference at all? Has that mindset changed, or do you think even the best companies today are able to recruit people like that? And so what I mean is a little bit, I think there is a somewhat difference in generations where you have people who are like, hey, like I really want work-life balance, or I'm not really willing to put in that time and effort or be a little bit patient just to see where things go because I'm surrounded by this fast growing company by amazing leaders like RF who I can learn from and grow from, even if I get some hot offer from somewhere else, I'm in a good spot. Has that changed at all, or is it just the good companies can find people who are going to stick around and really put in that effort, irrespective of generational change? Or maybe I just sound like an old man now, which I don't know.
Well, I think every generation is different, and that's a good thing because the young often see things as they are, whereas the old progressively look through kind of filters from the past that are not relevant. So I do think every single generation is different. That's point one. Number two is every old person always thinks that the young people don't work as hard as them. I mean, it's kind of like this, the world's going to hell kind of attitude is just pervasive. My experience is that young people can do incredible things, and that I just think it's just so different being young today than what it is. Each generation is just so different. So young people today have way more opportunity, way more chance to self-educate. They are far advanced relative to where I think we were at that age, but they also have a lot of pressures, and that there are a lot more things that a lot more obstacles to overcome. And I think like mental health is an example of something that is a real issue amongst young people today in a way that it just wasn't for my generation. And that's not because my generation are mentally healthier. It's because we just weren't subject to the pressures and the environment that they've had to deal with. And so I don't think you can be blind to that. You have to change. You've got to evolve. So in recruiting, I prefer to look for what's there. And some of the young people I meet today are just incredibly capable. And I would, I feel privileged to be able to work with them. Some of the ones that I come across in our companies and at our firm, but you have to work with them differently. You have to work with them on their terms and meet them where they are. And I think that's totally fine.
In going back to and I totally agree with that. And it's one thing we try at my company to be cognizant of and thoughtful about and find the right balance, but it's difficult at the same time. What are the key elements as a founder at Clearwell? Did you find yourself sort of changing? So you started You're a core of a few guys building this company, you and Andy flying out, doing all the sales, growing pretty quickly, building a big team. How did you change as a founder beyond moving from like CEO, I'm going to hand off as many tasks as I can? What other changes did you find yourself taking as you grew? How did you evolve as a leader?
Yeah, I think leadership style is different for each person and something you only learn about yourself through doing it. Because you can watch other leaders around you and draw elements from what they do, but you can't just copy what somebody else does. And so I think I became, as I got more practice and more skill, I became better at coaxing and cajoling the company in the direction that I wanted to go without having to use kind of like a hammer.
Mhm.
And the problem with hammers is that, there's always fallout from hammers. You
They
can
break,
you
they
can go
break,
there,
they break things.
they break things, and so then they have to deal with that. And so, I, for me, the learning was there's so many. I mean, there's so many, the learning was kind of who to listen to when to inform my view, because people around you you have to create space for them to be willing to tell you what you're getting wrong, and you are getting things wrong all the time. It's hard to know, and then better at coaxing and cajoling everyone in the right direction. And then I like to think also better about moving people out and trying to bring others in. But all of this is hard stuff. And so every time you think you figured it out, you make some mistake. And I think
Did-
it has got harder today, just environmentally. I think it's just harder to recruit. There's so much noise, and there's so much. The hype train has become much bigger through social media. So I think it's just harder to stay focused on the long term and fundamentals than it was.
So what then are the best founders that you're investing in today? What are they doing to stay focused on those fundamentals, or what are the qualities that they have that enable them to break through the noise or maybe ignore the noise?
I think it's just complete kind of dedication to what they're doing and a willingness to screen out other stuff. So they're not they're not anxious about what do my friends think, or what's the trend for right now. They're just completely focused on what they're building and their market and their business. And then that dedication, that focus kind of like rubs off on everybody else.
Does that is actually what I have a bunch of questions I want to keep asking, but I'm going to focus on the focus one
Yeah,
first,
it's
right?
okay.
Because that's a key thing. What 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 are the important parts about focus that are critical? Like what does it mean to really focus? Is it that you're utterly dedicated to the industry you're in? Is it that you're utterly dedicated to thinking, how do I build a great company, sort of company builder perspective? Is it a healthy balance of things, right? In other words, like sometimes being overly focused means you're going to miss out on other things in your life, and maybe that's okay. What is the right balance there too? So like, what is focus? What does good focus look like?
Yeah, so everything's a balance. There are things you want to do in your personal life to keep you sane and happy that you should 100% make time for and be there for, like family and friends and so forth. So let's set that aside, and I'll let people can decide for themselves what that is. But for the work portion of what you do, to me, focus is just a complete dedication to being excellent in the area in which you're working, so that you feel you're one of the most knowledgeable people out there. And then also being an expert in your business, where you're looking at it from lots of different angles at all times. And to look at it from different angles, that does require going out into the world and talking to different people and engaging and thinking broadly, maybe even looking at other domains and thinking about what lessons from there you can apply back, but always through the lens of what's going on with your business. I think it's really, really hard to be excellent at multiple things at the same time. And so, if you're starting a business, you're saying, I'm going to create an entity that is the best at one specific thing that the world will care about. For that entity to be the best, you have to be the best, or at least part of a team that is the best at what that thing does. And we live in a very competitive world. For you to be anywhere near that, you need to put all your energy behind it.
No, that is so true. I mean, that's actually part of why I originally wanted to come out to Silicon Valley, is because the advice I got from actually was another Sequoia backed founder. He was in DC, and I sat down with him. I was lucky enough to get introduced to him. Sat down with him, and he gave me advice that I still keep in my mind today, which was basically, if you want to be in politics, stay in DC.
Yeah.
Great place for that. If you want to do finance, go to New York. If you want to
Yep.
do media and entertainment, go to LA. And if you want to do tech, and he's a tech founder in DC, he's like, you need to go to Silicon Valley. That is the place to go do it because you're going to be surrounded by the best people. Yes, we'll be the most competitive, but it will also push you further than you've ever been pushed before.
Yeah, I agree with that. I mean, even post-pandemic, in the pandemic, there was a lot of, oh, location doesn't matter and what have you. But I don't know, I still feel now we're in the post-pandemic phase. I still feel that companies in Silicon Valley move faster because of the environment and the ecosystem here. You just can. You can learn faster. You meet more people with more relevant knowledge. This whole place is just so focused on inventing the future that if that's what you're working on, you just find more like-minded souls here with relevant lessons for you than anywhere else. And the result is that companies here just move more quickly.
Do you have a bias then towards investing in founders who are based in the Bay, even if their company maybe is global, that are based in the Bay Area?
At early stage, absolutely. I mean, to be clear, I mean, my firm will invest in different places, but I personally am very focused on early stage in Silicon Valley.
Yep. Yeah. And for that reason, because they're getting pushed in different ways, they're meeting different people, they're building a network that can help them and take them to the next level.
Yeah, because I just think companies here can execute more quickly.
Yeah.
And so I think you have a better chance of success if your team is here.
So going back to like the focus question, in what does it mean, like focus wise, what are the trade-offs? I mean, are there downsides to being overly and utterly focused? And so what I mean by this, right? A lot of people would say, well, I'll give you my own personal example. So I tend to believe that you can only really do two things well, and maybe not even
Yep.
that much. But so one in my case, that literally the two things are my job, and I spend a lot
Yep.
of time on that. And the second one is my family. Now, what
Yep.
that means though is I don't have a lot of hobbies besides reading, which usually it's work related stuff,
Yeah.
but I enjoy it. But I view that as a hobby, and I really enjoy reading a lot of stuff. And then also, but it means I also don't have a lot of time as much I want for reading, nor do I have as much time for friends and
Yep.
other hobbies like that. And so stuff falls to the wayside. I'm personally okay with that trade-off, but I don't know if other people are, or if they think through that ahead of time and then maybe they burn out at some point and it becomes really dangerous.
Well, I think that I think the idea you can have everything in life is a fallacy.
Yeah.
That even the luckiest people in this world, and by the way, I feel anyone working in tech in Silicon Valley, or anyone who's lucky enough to be in the United States, is among the most lucky people in the world. We have to make. I mean, there are trade-offs in everything, and life comes with ebbs and flows. And so, I think there's a stage in life which often go where, well, so for each area of life that it pulls you at different times, but it pulls you more at different times. And one of the most time-starved phases of life is when you first start having a family, and you have, whether you're married or we have a partner or whether you have children, that does take a lot of time. So 100%. And then if you're going to be an entrepreneur, that does take a lot of time. There's not room for a third thing. Now, the good news is that kids and companies grow up, and then at that point, there's a lot more time for friends. So I think that having, the friends piece is important, and hobbies are important, but I would consider them dormant for a period while you focus on these two other things. To try and do all three at the same time, I think is just really hard.
Yeah, no, that's been my general my thesis as well. And I've come to terms a long time ago with that trade-off, and I'm okay with it. So I feel fine about it.
Don't worry, Adam. By the time your kids are teenagers, they won't want to spend any time with you.
I know,
You'll have
I know.
lots of time for your friends.
Yes, no, I know. And then my friends, who knows, if whether they'll want to spend time with me then too, but hopefully they will. But no, that is, and I'm great with that, because in the end, I actually love the fact that because things are remote today to a large extent, I travel very little. And so for the fact, like, I get to be home every night basically with my kids, and I take them to school every day. And I love that fact.
Yeah. The one thing I'd say is that if you're going to be an entrepreneur, you have to enjoy what you do every day, and you have to do it for the joy of building your own thing. If you do it for just a financial outcome, and you kind of feel in your heart a bit resentful about the sacrifices you have to make, that is not a good place to be. And you should go do something else.
Very much agreed. Do you think there was a group of founders who came in over the past sort of few years when that the industry was like, it was sort of a cool thing, instead of going, you go from Harvard Business School and the path used to be going to consulting, or you go into investment banking, and suddenly it was like the cool thing to do is to go become a tech founder and get into YC. Has that changed given the downturn in the market, or is that still something you see, or was it okay that it happened, that just there was more talent coming into the startup ecosystem, which is a good thing too?
Well, I think the more talent coming into the startup ecosystem, the better for the ecosystem. And anytime you make something look easier, more people are likely to try it. I mean, that's just those are just givens. But I mean, I saw this in the when the dot-com crash happened in the early 2000s. In 1999 and 2000, literally everyone was jumping into tech and thought that it was kind of there's this kind of collective gold rush mentality that sometimes hits the valley, and that was then. That was crypto in a certain period,
Maybe AI now.
maybe AI now, yeah, and for some people, and that is generally unhealthy because I think people because it's an illusion. Nothing is easy. Everything that has any value, whether it's your friendships or your family or your work, it's all hard if it's going to be truly valuable. There may be a couple of people who got really lucky, like that guy in the show Silicon Valley, and there are people we might even know people who've kind of stumbled into a company early and not got fired and made a ton of money without doing much work. That's not a way to live your life. That those are kind of like the exceptions. And for the vast majority of people, it comes down. Nothing comes without it being hard and taking a lot of work. So you should only do this if you're fully committed to it. I almost feel like the default needs to be people do not start a company. Most people should not do it, and the world doesn't need more companies unless you feel compelled. Unless it's kind of like an involuntary thing of, oh, I've just got to do this because I see this thing and no one else is doing it.
And so I guess that was actually one of my questions too. So that is essentially the advice for founders or potential founders. Like, don't only start a company if you're truly compelled to go out there and do it, because it's otherwise too hard, too expensive, too risky. And I talk to people sometimes, say like, oh, I want to start a company. I'm passionate about this, but I can't afford it. And would your answer be like, everyone can afford it if you're passionate enough? And if you're truly passionate, you will find venture capital to help you make your business a reality. Or it doesn't have to be a tech startup. It could be any business. Like, if you're passionate about cooking, you'll find a bank who will give you money to start your dream restaurant.
Yeah, I mean, I don't buy the can't afford it argument. So I think that means you just don't want to do it enough, and that's totally fine. And you just it's a convenient excuse that you tell yourself. So if you look at many founders who start companies, they're not rich people when they start them. So they just compel. It's like the person who says, I can't get fit because I don't have time to go to the gym. You have time. You're just not prioritizing it enough so that you get to the gym.
Yeah. Right. I laugh because I've talked to people about this. I'm like, look, you can do a 7-minute workout, which actually hits all the key things in 7 minutes
Yeah.
every day. You have 7 minutes that I'm sure you can find. Going back though to like founder personalities and maybe some of the stuff you found at Clearwell, but also people you've invested in. And you mentioned, Elon Musk and Mark Zuckerberg, and you have people like Jeff Bezos and other folks like that. Are there certain personalities that you think are more conducive to pushing the envelope and building these absolutely game-changing companies? Or does it doesn't matter? Maybe just the ones we know about are the ones who, yeah, they build some really big companies, but they also have these outside personalities. And so that's what's interesting for the press to write about, right? Like Clearwell, like you're not that sort of person, RF. And Clearwell, therefore, isn't as interesting a story because you weren't
Well, no,
going
I
out with
mean,
a handle and sleeping in the office every night.
There are a million reasons why Clearwell's not as interesting as the incredible businesses that they've built. But I don't know. I yes and no. I mean, there's not one kind of person who gets to build a company. So it's not like you say, okay, well, you got to be an extrovert or you have to look at the world. It's not. There's. I feel like it's more a concept of founder market fit, where we've seen lots of different types of people, and this is why no good investor or can afford to be prejudiced. I feel, because if you have a prejudice and you bring that in, you're going to miss the next great opportunity because it looks different every time. Yeah, every time every outlier business breaks the rules in some way. And if there's any lazy thinking or prejudice involved, where you go, oh, well, you immediately dismiss it, oh, well, that would never work for this reason or that reason. You're just going to miss the next big outlier business in a world that's driven by the power law, where those are the businesses that really make a difference. And so I think you have to, yeah, I think you have to acknowledge that it's different each time, and it's more about the founder's fit with the opportunity they're pursuing. I mean, I'll give you one simple example: is there's a prejudice, well-founded, I might say, against MBAs as founders in Silicon Valley. And this was true for a long time. Why was that the case? Well, because most founders came from a technical background. And why? Because you start a company by focusing on product. And if you're technical and you can, even if you're not building the product yourself, you have deeper insight into what that product is, then that's a better starting point for building a company. But then the world changed. And guess what? There were now these businesses that were very operational and people intensive, like Uber, like DoorDash. And the founders, operationally minded, super driven, very smart MBAs. And so if you exercise lazy thinking and go, well, that profile of person doesn't make for a good founder or doesn't start, you'd miss the entire category. Arguably, again, it's happening today. Software is becoming much easier to write than ever before and to create. Well, thanks to AI, it's now possible for a domain expert, someone with a detailed understanding of workflows in whatever, government procurement or healthcare or whatever domain, it's much easier for them to create an application than ever before. And so there's a good chance that the next generation of great app companies are built by people who look totally different from the kind of young Silicon Valley engineer that we've seen in the past.
Yeah.
Look a lot more like older, more experienced domain experts, which is not a profile that historically has started software companies. So I say all this to say that you have to keep an open mind.
How do you work on the open-mindedness for yourself? I think, by the way, I would argue the same thing you're saying for an investor also applies for founders, right? Being open-minded, being willing to change, because so many companies don't do that, and then they get eaten up by the competition over time. But how do you, for your own self, how have you kept your mind open enough to not use old heuristics or apply new ones in your ability to continue to invest in the next generation of world-changing companies?
Well, I think you just have to play with a young child for a little bit, and they are constantly asking why without any preconceived notions. And if you can bring that child's mind to things, then you'll be in good shape. I think it takes conscious effort. It takes more effort as you get older, because as you get older, you get more set in your thought pattern, and so like any failure state, once you are conscious of it, you adjust for it. And so for me, before meeting a founder, I try to just mentally reset and think about what they're doing with a kind of with an open mind, and try and come at it from the perspective of how this could work, as opposed to the reasons that it won't work, and then kind of explore that with them to think together about how this thing could really take off.
Do you think does that same mindset apply though to founders? So if I'm trying to build my company, be strategic about direction and where I go, how do I have that open mindset as a founder in a great entrepreneur, hopefully, around that perspective, like being open-minded, but also being focused on like the day-to-day, and also being
Yeah,
able to
it's
make
really
decisions
hard as
about
the
decisions.
founder. You're right. It's really hard as a founder. I feel like they're almost two mental states. One is unbridled optimism, which you have to have as a founder to be kind of looking at the positive of things. The other is this kind of clinical emotional detachment, to be able to see things as they really are and not how you would like them to be. And for those two for those two to coexist is really hard.
Yeah.
But they have to, because you have to be optimistic about things, but at the same time, you have to be able to be objectively critique what you're doing and how that might change. And so for me, I used to think of it, I, I would have different sides of myself come out with different people on my team. And I would try to, because they would basically take the other side. If you see what I mean, where
Mhm.
if I were being optimistic, they would be pointing out the issues, and then we'd kind of go back and forth, and then I'd think about how I felt about it afterwards. So that was my solution to it. But you need both of those as a founder.
So is that a conscious decision then with these people who are reported to you, as just being a good manager? Like you're gonna change up the questions and how you act with different people because it gets different reactions, and that's just being a thoughtful manager, it sounds like.
Yeah, I mean, people who are on my exec team, it was my board members, it was friends who I viewed as advisors. It's a kind of distributed group of people I'd have that I would be bouncing this around with to try and maintain objectivity, that balance of optimism with objectivity.
And so going back then to once again sort of the sort of famous founders to some extent, a lot of them have certain cultures where it's just like, it is just gritty. They're just working nonstop. It
Yeah.
is all in all the time. Is that something you see across sort of really successful quote unquote founders in companies? Or is it once again a mixture? You have to be all in, you have to be focused and doing a good job. But what do you find across the companies you invested in and of course the ones you founded?
I find that people like winning. And so if the company feels like it's winning, people are willing to put their heart and soul into it and work really hard. If it's winning and you have a good culture, people will step up in that situation and sacrifice more than you ask them to do. If what doesn't work is grinding people down, telling them what to do, kind of the whip, if you like, or the kind of stick in terms of forcing people to do stuff. That just does not work in a modern economy, and it's also not the culture that you'd want. And so I think that what happens is initially you start a company with a group of people willing to work really hard and make real sacrifice to try and create something from nothing. And hopefully those people have lots of equity and lots of upside to benefit if it works, because it is a very risky thing to do and involves a lot of sacrifice. That group, you then form a tight nucleus of some subset, and then you spend a period of time where it's really not clear if it's going to work. And in that time, you want to find like-minded believers, but there's a limit to what people beyond this initial founding group, there's a limit to what they're willing to do just because they have a lot of other things and going on in life, and there's a certain level that's reasonable to ask, and
Mhm.
you don't go beyond that. If with that group you can then hit something that shows a path towards success, then that group often accelerates. Other people jump on, that group steps up, and a company can just accelerate into it and really achieve amazing things. I mean, I feel like that's partly what we've seen at OpenAI, which started with a group of true believers, and then they took a while before they figured out exactly the direction that they would go. And now, as they've shown the potential for the technology, not just them, but other companies, Anthropic and others, I mean, people there are working tremendously hard and outpacing giants like Google.
Mhm.
So that's the most famous example from today, but there are lots of companies where that happens.
How does compensation play a role? And by compensation, I don't just mean cash compensation, but it sounds like all the other
Yeah.
elements right around like growth, career, just work mission. What are the elements that go into good compensation? Because it's certainly something people say. I've had this happen at our company. Say, hey, look, I'm I'm maybe not. I don't feel like I'm making enough money for the work that's expected of me. And I'm like, well, here's why I think I disagree. But like, how do you think through compensation and the relevant pieces that people should take into account and that founders should take into account?
Yeah, I mean, compensation is one of those emotional issues that I generally feel compensation only makes people feel unhappy. And so it's not
I've totally
worth.
found the same thing.
Yeah, you never. So everyone always feels like they should be getting more. And so I haven't found it really very useful to in terms of a, a a tool to build a great company. It's not like a necessary evil that you have to deal with as best you can. What causes you to be a great company is building great things and having a great culture that makes great people happy. And it's the culture that people live with every day. On the compensation side, I think the best you can do is really the message that comes with compensation, and making the people who really are making a difference, making sure that they feel appreciated and looked after, and that you're doing as much as you can for them. And if people feel that, then they don't think about comp because it doesn't really matter. Maybe I could quit, get a job for a few $1,000 more, but I love these people. I'm happy with my work. I trust Adam. I don't need to worry about it. So I think as a founder, I think the goal is to identify who are the key people early on, and then proactively reward them as much as you can, because you can never reward them enough.
Yeah, it's a great way of putting it, and it's so true. And it's something that people, I think a lot of founders forget that they have such an outsized percentage of the company, giving a little bit more equity, let's say, to the people who are sort of the level right below you
Yeah.
has such an outsized influence and is not meaningful in the end game for you as an individual. In fact, having them stick around and be really good, it's more meaningful to your overall outcome than giving up a few. Like, I'd rather have 10% of $1 billion company than 100% of $1 million company. So
Yeah, completely. But it's or 100% of a $10 million company. But I think it's not just the compensation; it's the message that comes with the compensation that's so important. Because if it feels transactional, and if it feels kind of, or if it feels begrudging, where I had to complain to get this compensation, or he's doing this for this kind of reason or that, it doesn't have the same effect. If it comes from a place of, wow, that's great, I feel like this person cares about me and is looking after me and wants me to do well, that's where compensation has a big impact. So I guess the one point here is comp is not about the numbers, it's about the message and the emotion that comes with the numbers.
in along that message, and in talking a little bit more about culture, we talked about it already a little bit, but what do you find that founders and CEOs, one of their key jobs is around like repeating culture and talking about culture and reinforcing that culture and kind of everything that they're doing, and so that it's not about cash competition, it's about, hey, what is our mission, what is our vision, what are we trying to build, and why should people care, and repeating that on a regular basis, because people have a tendency to sort of forget sometimes, or they
Completely.
don't live it the same way you do. Do you find, I mean, I kind of joke that a CEO's role is actually a CRO's role, which means chief repetition officer, not revenue. But do you find that to be true?
Completely. No, I mean, you will have a different message for for the team members versus investors versus customers. But you need to have a very clear articulation for each one about why they should care and what they're doing. So Clearwell, Legally Discovery, our message to the company was, we're a company that's dedicated to finding out the truth on the most challenging issues that people deal with. Because the reason they're doing e-discovery is there's some big dispute, and people are trying to figure out what happened. Well, we help them get to the truth of what happened by looking at email and documents to understand exactly who knew what and when, and moving it out of the realm of he said, she said, and faulty memories and made up stories. And so our goal we are truth seekers in helping the legal system get to the right answer. And I don't know, I mean, I think that's much more interesting than we make e-discovery software. And it's true. I mean, it speaks to the core of what we were trying to do.
Yeah, no, it is, and it gets people energized and gives them a mission, gives them purpose, which is
Yeah,
amazing.
and I think that with other things, it's not just that. It's that combined with loving the people they're working with at a company where they feel they can grow personally, where they feel there's kind of progress and a winning feeling to it. I think all those things combine to make people feel energized at work.
So I want to talk a little bit just about being a VC, and what that looks like, and what you look for. And so, sort of a segue, and this might be a little bit of a tough question, but you mentioned, look, the most fun you ever had was working at Clearwell and building Clearwell. So
Yeah.
you sell Clearwell. It's a great exit for everyone. Thank you, by the way, for making that happen. I remember getting
Yeah.
the money. It was a tiny, tiny amount for me
Yeah.
when we
Thank you,
exited, but I was
Adam.
like, this
It's
is
an amazing.
amazing. I was so excited as this person getting even a small amount, and being part of that. The world was your oyster. You could have done anything. What made you decide to go as sort of the entrepreneur of your own career? What made you decide to go into venture and not go do another startup? Why take that direction versus build the next company?
Yeah, I was very lucky to have two wonderful venture capitalists on my board at my two startup companies. Mike Moritz invested at my first company. He was a partner at Sequoia at the time. And then Jim Getz, also a partner at Sequoia, invested in my second company.
Two of the best in the business.
They're truly exceptional. And I just felt tremendously grateful to both of them for not just believing in me and investing in the early rounds, but also helping me grow as a founder and as a person. And so when they suggested that I join Sequoia and become an investor, which wasn't something I thought much about to that point, I just felt that it was a chance for me to help other entrepreneurs in the way that they had helped me. And so that was really the motivation. It's not an easy decision, and there are other great founders who have chosen not to do it, because as an investor, you're never the hero. You don't get the satisfaction of building, of deciding, of creating, of competing and winning in the same way. It is you are behind the scenes. You're a supporter. You're a coach. You're an advisor, but it's not the same thing. And so you do give that up. It's not free, and that's why I say that as founder as CEO of Clearwell, that was truly the most wonderful role. But my journey as an investor, where I spent 7 years at Sequoia and now 4 years at Bain Capital Ventures, that's had kind of wonderful moments in its own way. It's just very different from being an entrepreneur.
In when you think through being a VC and using the experiences you had at Clearwell in other places, what are those? And we've talked about a lot of them, but what are the key things you really look for to say, hey, this entrepreneur has what it takes, right? Because you're seeing, I don't know, at this point, I don't know, you've seen probably thousands of pitches. What are the key things you're looking for? You're saying, hey, like, and you're making a relatively snap decision. Maybe you do a bit more diligent things, but what are the key things you look for, insights into that entrepreneur sort of soul or skill set or experiences? You're like, this person has the chance to be that outside success, and you're still going to get it wrong 9 out of 10 times, probably, hopefully a little bit better than for you, but like, still, you're going to mess it up a lot.
Yeah, I mean, first off, I try to make it not a snap decision. So my ideal is to really have a chance to get to know someone before we get to the investment conversation, because it's a big decision on each side. When people choose an early stage investor, they're really making a recruiting decision, not a financing decision. They're picking someone to be their closest advisor and supporter through the 10-year journey that a company could be. And the fit matters, and chemistry and alignment of vision, and those things are best figured out over a period of time rather than in one 30-minute Zoom meeting. So I really try to spend time with founders up front so they get a chance to know me, and and vice versa, so that we can all make a good decision. So that's the first thing I'd say, is that for anyone thinking of raising money, I think it's worth thinking about the types of investors you'd be interested in and spending a bit of time with them before you formally raise, so that you can make a better informed decision when the time comes. In terms of the things that I'm looking for, it's a handful of things that collectively lead to a kind of feeling that, yes, this feels right, and I think we could work together really well, and I want this person to win. I want this business to happen, and I'll do everything I can in my power to help them. And that comes from, I think, first off, I feel like there needs to be some insight or some idea that causes me to change how I look at things. So that's one thing, because we all have a set view of the world, and every great company challenges that set view in some way. So that's the first thing. I think the second thing is just a feeling that this founding team can execute and can actually build towards what they're talking about. And often that comes over a period of time, from seeing how quickly they learn, I think is probably the second thing.
How do you see if someone's learning quickly generally, but certainly as an investor? Like, how do you judge that someone's learning quickly? Is it because you're sending them articles, you're asking them tough questions, and they're coming back to you with a detailed answer?
If you meet people, more than once, then is each conversation getting deeper? Is their understanding of the domain getting deeper? Are they doing things from talking to other people? Are they learning how to build a company and doing things that they should be doing? You can get a sense for it pretty quickly. So that's probably the second thing. And then the third thing is just a shared vision of where you want to take the company. Because at the time that we invest, these are early stages, seed stage companies. You have maybe a small founding team, an idea or a prototype, and we're investing with this idea of what it could become. And that idea is always fuzzy at the early stage. The clear outlines of the opportunity are not in focus. If they are in focus, it means that the opportunity is not big enough, frankly. But so they're never really in focus for the great companies. But there's this kind of shared view or shared philosophy of where how the company can evolve and what it can do. And And that's when you get, that's when you feel excitement. And so, I don't know, that Contextual would be one example of this, which is an AI company that we invested in earlier this year, where in that case, I got to know the founders in a short period of time, but we just had this very common view or shared perspective on how to build a company and the potential market that we could step into, and then we've been working with them ever since.
When you think through all the companies that have also failed, like I know you mentioned a little on your LinkedIn, but also as an investor, you've had that happen. Like a lot of companies still fail, despite you
Yeah.
having this great positive feeling. Of course, when you invest, you're like, it's all going to be
Yeah.
wonderful. You're going to be successful. What are your takeaways or lessons for why those entrepreneurs didn't achieve the excellence in outcomes that you expected? What went wrong for them?
Yeah, I kind of feel, at least in my experience, sometimes it's the market didn't materialize.
Mm.
And so that's happened, maybe once in my investing career. But the far more common situation that has happened several times is just human beings are complicated and life is hard and stuff changes. And so we've had, I've had several situations where the co-founders have had disputes and felt they've been unable to work together, and then come to the board, including me, saying, look, this person needs to leave, or we're all going to leave, or and that's just tremendously hard to work through. I think pretty much every situation where that's happened has resulted in an unsuccessful company. The only times when when that's not been the case is when there's been one clearly senior co-founder getting rid of one more junior co-founder. But anytime you've equalish co-founders and there's been this kind of dispute, which has happened a couple of times, it's never worked out well. And so, that's been the biggest issue.
Do you find, so then, I mean, how do you judge ahead of time? Are these two co-founders or multiple founders who are going to work out well together, or where it's going to be failure? Or do you prefer to invest in companies that don't have co-founders, given the risk factor involved in a co-founder dispute?
Yeah, well, one of the questions we ask is, of course, is how well do you guys know each other, and have you worked together before, and stuff like that. So you try to understand the depth of the relationship, but it's hard. I mean, there's some relationships you can have for a long time that just don't work in a co-founder context. There are other people who just meet and immediately click and work really well together, even though they're not personal friends. They just work really well together. So you try to get a sense for it. Ideally, people have worked together before. They don't need to be personal friends. Some ways easier if they're not friends. But if they've worked together before, then they kind of know what they're getting from each other. And then that, I think that really helps.
And do you prefer companies that have one or multiple co-founders, or solo founder companies?
Multiple co-founders. I mean, it so happens. I think the last three companies that I've backed have been multiple co-founders and people who have worked together before.
Yep.
But that's not exclusively true. There are other companies where that's not been the case. But my preference would be multiple co-founders who've worked together before.
And then, so outside of the co-founder issues leading to failures, are there other ones as well, where are there founders who just aren't as good as they think they are? They lose steam.
Well, the third reason, I mean, which is just inability to execute.
Yeah.
And so it's kind of, they just don't get a product out that is a product people love. And so now, to be fair, it's hard to do that.
Yeah.
It's just tough. It's not like it's easy to create that product. But that is kind of on the founders. No investor can create a product that people love. I mean, that's not what they do. They're not set up to do that. And so while it is hard, it is kind of like the core thing that a founder must do out of the gate is create. And it doesn't mean the first version has to be perfect. They can iterate towards that, but they have to, at some point off the existing funding, get to something that people seem to love. And so that's, usually it's not that they release something and it misses the market and then they kind of iterate away, and that doesn't usually happen. Usually teams that get something out and then iterate find the market. They kind of get there. There are teams who just don't get something out. And so
how do you, as an investor, or how do you push people, say, hey, you need to get this out there? Because look, your job is to evaluate the vision that the founder is telling me is one that if they can execute on it, I believe there are going to be a lot of buyers out there for this.
Yeah.
how do you then help them execute or say like, these are things you need to do to get a product out there, move faster? Or are there tools
Well,
you
I mean,
use
the
or
talk with
ideas?
in a rational funding market, you only raise money for 18 months to 24 months, right? And that means you need to hit your milestones within a year, at least aim to do that.
Mhm.
And I think that's reasonable. It takes time to recruit and to build something on the one hand. On the other hand, if you take too long to put something in the market's a moving target. And so by the time you've built it, things have moved on and you've missed. And so I think in a rational market, that kind of 12 to 18 months time frame for hitting major milestones is a good one. And I think it's been proven to work. Where it breaks down is well, is I mean, recently it's been that overfunding companies, so they feel like, oh, we have 5 years now to build stuff, which I don't blame founders for taking that money because if it's offered on good terms, why would you not? But having taken it, it's just very hard to maintain that same level of urgency.
Yeah, no, absolutely. I one of my investments sent us a note yesterday saying basically we took too much money at too high of a top of the market, overinvested. We've cut our burn massively. They have 6 to 7 years of runway right now. They will figure it
Yeah,
out. They have a good product and market, but it was a hard lesson learned from what the founder said, and it was a thoughtful note he sent to his investors on that topic.
there are a
Um,
lot of founders in that situation.
in their learning hard lessons today on that front too. When are the lessons you just gave about companies that have failed, are they similar to the lessons you've learned for companies you missed on, right? Because you're also passing on
Oh.
a large percentage of companies too. Uh, what made you pass them, and what do you regret or lessons learned there?
Oh my God. I mean, I have so many regrets. It's not even funny. I mean, it's so the biggest failure states for me have been when I've loved the founder, sometimes even loved the idea, but so the most common one is I love the founders and I don't like the idea. The other one is I've loved the founders, like the idea too, but there's been some other reason why it didn't make sense. And so I mean, the example, and these keep coming back to haunt me, Adam. So as an example, my son is now a teenager. I mentioned some product to him the other day, and he goes, "Oh yeah, isn't that the product that you met the founders? You loved it so much that you came home and made me do my third grade project using that product because you said this is the future, and this product's amazing."
Yeah.
And I said, "Yeah, I did do that. I did force you in third grade to use it." And then I asked myself, why didn't I invest when I loved the product so much and the founders were amazing? And the reason was that, when we discussed it at work, it was, well, this company's in Australia and it's got a big team in the Philippines. I mean, it's not the kind of thing that we're looking for. But now I look back and say, well, yeah, but I mean, I should have realized Canva was a great company and we should have invested. And so there are lots of cases like that. I think that, I mean, what can you say? This job makes you feel like a failure because the world is really unpredictable. And every time you think you figured it out, you go and screw up in some way. The good news for founders is that you just shouldn't listen to investors, really. I mean, investors don't know anything. If you have conviction and you think something's going to work, there is a long list of phenomenal companies where investors didn't initially believe. I mean, not just Canva, VMware, many others. And what I say generally is what I found. I found this with Guardant Health, where we invested in the Series A, and then ultimately the company went public, and I was lucky enough to be on the board through that journey. Clary, where we incubated the company, and now it's a unicorn and stuff. What I found is that early in a company's life, people always doubt. You always have all these very sensible reasons why something doesn't make sense. In Clary's case, it was, well, doesn't Salesforce do that? And aren't they just going to, kind of do that? And then at some point, conventional wisdom flips and it becomes the opposite. And it becomes, well, of course you need a sales tech stack to alongside Salesforce. You don't just need Clary, you need 3 other products too. And so this is what you find as a founder, is that everyone will tell you you're wrong until suddenly they flip, declare it was obvious in retrospect, and that you're clearly right. And I found that in the most successful companies I've worked with, I found that has happened every time.
And part of actually my learnings on that front too have been, part of it is just sticking around long enough to prove out that point. Because if you give up too early and get out of it,
Yeah.
you miss that opportunity to become that key next thing that's part of the Salesforce stack, basically.
Yeah, completely. And The way I thought of it as a founder. So when I was starting my companies, the question was, what do you need in order to start something? And the things that I wanted to have conviction on when I was starting were the first one. Like, I wanted to believe in a big trend. Like I wanted to feel like, okay, the world should work this way, and it's inevitable that things are going to change in this direction. So it's inevitable that, in the case of garden health, that people will want a blood test to detect if they have cancer because they don't want to be digging tissue out of themselves. Or it's inevitable that you need something to improve sales forecasting, apply AI to sales forecasting and other sales processes. You need something like Clary alongside a database like Salesforce. And so I wanted to just believe that was going to happen. But I would often say, I don't know how long it'll take for the world to figure this out, but I'm willing to be patient. So that was the first thing. Second thing is, give me a wedge. Just give me a starting point so I can get a foothold with something specific that enables me to kind of get to that next thing. So if I have a macro trend behind me and a wedge to enter the market, and then a couple of co-founders who are like-minded, who I'm psyched to work with, that for me was enough to start my company.
Yeah, I think it's an amazing place to essentially end this. But I have one question I ask everybody at the end of the podcast, which is, if there's one single piece of advice you could give to budding entrepreneurs today, out of all the lessons learned throughout your life and in history and experiences, what is that one piece of advice you say, if you can do anything really well or work on this, what is that one thing?
I think I've got about 10 things going through my head, but I think the one thing for an entrepreneur to be effective that they have to do well is tell a story. That don't go out there talking about whatever, facts, figures, technologies, people you've met, your backgrounds, all that stuff. Tell a story, because that's how you will get other people behind you, whether it's recruits, customers, or funders. People respond to stories, and so you have to craft the story for them so they can understand what has driven you to do this thing.
Yeah, no, I couldn't agree more with that. It's one of my personal pet peeves, is that ability to tell that story. So Aaref, how can folks find you if they want to get in touch, if they want to learn more about your career experiences, potentially get an investment from Bain? Where can people find you today?
Yeah, they can. Well, you could always email me at aaref@baincapital.com, or you could ping me on LinkedIn, although I'm not always super on top of the messages because it gets hard to keep up. But I'm generally reachable. They could just reach out over social.
Well, what I would tell folks is you should reach out to Aaref. He is one of the people who I've once again looked up to. I remember just always seeing like the hustle, the work, everything else that is led you, in my definition, of being an excellent entrepreneur and successful founder and leader. You might have different opinions about yourself, and I'm sure there's a lot more you want to work on in life. But Aaref, thank you so much for joining me today. I really appreciate it. Thank you for the time, advice, thoughts.
Adam, it's really been wonderful to see you again. You've always been such a phenomenal entrepreneur yourself, both at Clearwell when we worked together and today. So thanks so much for having me.
My pleasure.